Welcome, Internet Capitalists, to episode 27 of The Big Show. Today, I am dressed up as a shadowy super coder, as either Elizabeth Warren or Janet Yellen would say, but only temporarily because I'll get too hot. I am back in Pittsburgh, PA, and as you can see, we are decorating for Christmas here, and Benjo is filming his last show in the Big Apple, the home, the center of crypto universe, the home of BlackRock. Benjo, how are you doing?
Pretty good. It's getting a little cold here in New York, so happy that I'm going somewhere a bit warmer. I guess in the immediate term, we will not be very warm because we are going to the Indiana Notre Dame playoff game this upcoming Friday. So that'll be pretty cold,
Yep.
but excited to be out of the windy outskirts of the Manhattan here. So
Yes, yes. Short timer there. Lots going on this week. Lots going. Little family talk there. We got the entire family coming back to Pittsburgh Wednesday. Heading to Notre Dame on Friday. Back Saturday to watch Penn State and the Steelers versus Ravens in a huge game. But this is not a sports talk show. This is a crypto talk show. So let's dive right into crypto. Ben, do we want to go straight into the markets first?
yeah, that's
Or
fine.
I know you got some stuff you want to talk about.
Yeah, no, we can just look at the charts. I'll pull up the Bitcoin chart here just so we can see what has been going on. The chart is still insane, by the way. And let's see if it lets me share out. There we go. Okay. I see that's up.
Wow.
Bitcoin is still sitting right around 100K. So it's sitting at 101,427 United States dollars for a Bitcoin as we speak. And it's just been kind of ranging here, which whenever we had that initial move from about 68 to 100, everyone was saying that if Bitcoin ranges here, that is the ideal scenario because that gives the market participants confidence that the market's not going to imminently nuke. And it's also the liquidity and the gains from Bitcoin can flow down to other assets, and not all the flows are just going to Bitcoin. So this was the ideal golden scenario, and we have seen alts run a bit. So that's where Bitcoin is. Any thoughts
Yep.
here?
Well, we can. This is a great chart, and I think Bitcoin had some positive tailwinds yesterday after the market closed with the MSTR listing on the Nasdaq 100, and I think you're going to talk a little bit more about that in a macroscopic sense later. But it still looks really good for Bitcoin.
Yeah, I just thought it was funny with the MSTR being added to the Nasdaq that your everyday Joe who kind of dollar cost average into that index in their 401k or whatever it might be is now essentially buying a leveraged Bitcoin asset. So I think that's pretty funny, if you ask me.
Yes, 100%, 100%. And you know what? Let's pull up the ETH chart. There you go. Let's talk about this real quick, and then I want you to dive right into the anecdote about how the traditional financial system is kind of I don't want to say screwing over, but leading astray the new investors with their default allocations. But let's talk about ETH here first.
Sure. So this is the ETH chart. And as we were talking about maybe last week, we have some really bullish TA here. So we have that triangle that I drew last time. And we're right on the
Mm-hmm.
cusp of breaking out. We've literally just been hanging right below this 4K level with that little move down earlier in the week, which we recovered from. So we're sitting at about 3,900 US dollars for an Ethereum. And I'm becoming increasingly convinced that the move out of this range is going to be pretty explosive. And I think we see ETH perform in a way that we haven't seen it perform in quite a while for a variety of reasons, which we can get into a bit more. But this is the ETH chart, one of the best charts in crypto at the moment, I think. So pretty happy with how that looks.
Yeah, absolutely. Finally, and I don't think we need to go much into this because we've talked about it a lot before, but the altcoins besides ETH are also starting to show some strength. Things like Lido, Aave, Uniswap, all of those.
Yeah, I'll pull up a couple of the charts. I'll pull up Aave and Lido because those charts have been awesome. Insane charts right here, and I think this doesn't stop here. Aave has this explosive move out of this really long, nearly 2 year accumulation period, and this is just one of my core theses going into 2025 that ETH and ETH Dino DeFi outperforms heavily. I actually think that we see institutions becoming increasingly interested in Ethereum and tokenization, as we've seen with BlackRock and others, and they see the potential here, especially when you have Donald Trump's DeFi protocol and other political figures dollar cost averaging into tokens like Aave, ETH, some other DeFi tokens as well. It's just kind of nuts how fast that's changed. And I think these are still radically underpriced if you look at comps in the crypto ecosystem, for one, and if you look at traditional financial equivalents. So if you believe fundamentally that DeFi has a future, these are the tokens you want to buy as an investor. So this is Aave. I'll just pull up Lido real quick also, which I think is a great chart. So I have these moves out of this similar accumulation period and a lot of room to run. But those are the charts. Anything else you wanted to look at?
No, I mean, that's fine. And I think when you and I talk during the week, when we text, like we kind of refer to at least these two and a few others as like the blue chips now of the alt tokens. ETH is obviously the king, but these protocols in these different sectors like Aave, Uniswap, Lido are certainly the blue chips right now.
Well, yeah, it's DeFi. It's DeFi is the sector, I think, and it's just DeFi is having, they're calling it a bit of a DeFi renaissance. I really do think these tokens get massive bids because on crypto, you can get insane multiples on the native crypto narratives. So let's say that was meme coins over the last few months. Now it's hyperliquid tokens, the hyperliquid token itself. Sometimes it's all L1s, whatever it might be. Sometimes AI tokens, whatever it might be. But
Yep.
there's no interest in bidding those from institutional money and really no ability to bid them. There are two tokens that institutions have the ability to bid in size, one because of access and two because of liquidity. And those are Bitcoin and ETH. And then the
Right.
next very logical derivative for what institutions might want to bid are DeFi tokens for a couple of
Mm-hmm.
reasons. One, DeFi is essentially ETH. The vast majority of high total value locks in DeFi is on Ethereum. It's 70% plus or something like this. And this is where all the activity is happening. This is where all the liquidity actually is at that scale. And two is because the assets will make sense to institutions because they can value them because they have revenues, they have cash flows. And as soon as these fee
Mm-hmm.
switches, these revenue sharing models are enabled, it becomes very, very easy to compare these tokens to cash flowing businesses and infrastructure in the traditional financial ecosystem. So I think it's still a bit of a contrarian bet, but I think these things and ETH and DeFi coins for this reason actually start to catch an institutional bid moving forward. So that's one of my core theses over the next few years, and we'll see how and when it plays out. But I think it plays out.
Yep. So thinking about Aave, if you compare Aave to a retail bank, which is a bank that lends and receives assets, it's a very straightforward comparison, right? You look at the difference between what they lend at, what they borrow, or what they lend at, and what they give out in interest to depositors, and that's the profit minus operational costs. And the beauty of things like Aave is there's zero operational cost or near zero versus billions, in traditional retail operations for the fixed assets and the people. So it seems like to me it's a very easy comparison for the smart guys in finance to value these things.
Yeah, 100%. And I know we'll get people commenting on this, or their view is, why are you talking about cash flows? No one in crypto cares about cash flows. It's not about fundamentals. It's about hype narrative. And that is true in a crypto native sense. But from a fundamental multi-year perspective, this is massively bullish. These are actual products that I believe will serve as a key piece of infrastructure for the financial system moving forward. And that's a bet I'm willing to make over multiple years. But I just think it happens faster than most people think. So that's a bet I'm willing to make. And you see early signs of DeFi tokens outperforming since the election. It's been one of the top sectors. And it seems like this is one of the narratives. I think there's three key narratives. One is Solana flows and meme coins, that all that attention in that retail focus space is moving to hyperliquid. One, I think that continues. Two is the AI tokens, which we've discussed. And
Mm-hmm.
three, it's Ethereum and Ethereum DeFi. Those are the areas that I'm looking at right now and super bullish.
Agree. All right. Well, this is good. Let's move on, and I want to tee you up. So you've had an experience I want you to talk about where a very large employer auto enrolled an employee, a new employee, new hire in their retirement plan, and talk about that and what they did.
Yeah, so if you have a retirement plan through your employer and you just choose the default asset allocation within that 401k or whatever it might be, they will essentially give you a very traditional asset allocation in portfolio. So this will include a broad, diversified portfolio of equities, I believe global equities, and that's fine. I think that's a relatively safe, low variance, good growth play over many, many years, and it's good to have exposure to the global economic system. But then there is some not non-minuscule allocation to bonds. And mind you, this is for a 24-year-old. So it was a 5 or 10% allocation to bonds. And there's no allocation to crypto. And actually, in a lot of these cases, these institutions have been barred from doing any business with crypto. They're even calling it scammy, whatever. And I just think this is a huge disservice to young people. It is the fastest growing asset class, the best returning asset class on a multi-year time period since the assets have been invented with Bitcoin in 2009. And the fact that they're investing people's money in bonds as like a safe, good investment is ridiculous. Because even if, let's say, you put $1,000 into your 401k, let's say like 5,000 over a year, if you're yielding like 5% on those bonds, which is fairly high, that's not going to make a dent in anything in your life at all. So I just think it's a disservice, and I think people just need to be more educated on what those default allocations go into.
Exactly. And, that's a good lead into something I wanted to talk about today, which is Jeff Park's radical portfolio theory. And some of you may know Jeff. He's, I think it says head of alpha at Bitwise Investments, real good guy to follow. But his theory is that we need to rethink the traditional 60-40 portfolio of stocks and bonds, which sort of gets to what you're talking about. Um, and his moves to saying, okay, the 60-40 might be okay, or 70-30, but the 70 part is in non-traditional slash digital assets, and the 30 is the entire pie of the traditional assets, meaning the current 60-40 of stocks and bonds becomes a total of 30%, and the other 70% goes into things like digital assets, non-traditional things like land, art. Even he talks about designer handbags, things like that are non-traditional, but they hold value. Um, and this is all, it's interesting to me to hear that. It's obviously very well thought out. But one of the number one reasons that he came up with this wasn't because he's a crypto bull, but because it's becoming obvious that the traditional financial system is so intertwined worldwide that there really is no ability to diversify in the traditional financial sense. Stocks, bonds, Europe, U.S., Asia, as we saw particularly on August 5th, is all interconnected. And if something bad happens to one, it ripples through all the rest. The radical portfolio theory says, well, let's have a literally divergent group of assets that are as little tied to those other traditional assets as possible, and let's focus on keeping that diversification for the long term growth. That will reduce actual risk, not just perceived risk, right? Because we're talking about risk here. Well, stocks are less risky than bonds, but the real risk isn't stocks versus bonds. The real risk is running out of money before you know don't need money anymore. And this is a way to balance that. So that's something very interesting. I hope we can have Jeff on at some point in the future to talk more about this. But it seems like we're at this inflection point in a lot of spaces where things are going to change, and digital assets are going to be playing more and more mainstream role in all of these, I'll say, core financial decisions.
Yeah, well, I think a lot of things there. One, I think picking back off the last thing you said, the whole like digital assets thing is just funny because it is a good distinction to make now. But I believe in the future, everything will be a digital asset. Everything will be
Yeah.
tokenized in the blockchain for the simple reason that it's more efficient and it's a better system. So I believe that happens.
Yep.
In terms of the allocation, this goes back to something that we talked about a few shows ago, where the way that most people view crypto as risky and current digital assets as risky for two reasons. One, they think it's all just nonsense. Like there's a large swath of even people like in normal finance who think that crypto is a complete scam or that's just stupid because everything's trying to replace the dollar. They think everything's trying to be a currency, which is not at all what's going on. And people just don't know that. So, one, they just fundamentally misunderstand the space, haven't done the research. And then two, it's because it's high volatility, right? And high volatility, in my mind, is not necessarily a problem over the long term if the asset class or the asset that you're investing in has high sustained growth over long time frames. It's just your cash needs. So basically, if you're doing what Jeff Park is saying with this 70% allocation to crypto, to alternative assets that likely have higher variance than these other assets but higher sustained growth over 3 4 5 year time chunks, then you just need to be able to meet your cash reserves otherwise. And it's funny because that 30% cash reserves, like typically they would have said put that in bonds. That's not going to move that much. When actually whenever they raised interest rates, that actually busted a bunch of banks and hurt a bunch of people. But
Yeah. Ask Silver Lake how that worked out for him.
Silvergate,
The bank that went out, Silver Lake, Silvergate.
yeah, that was more of a regulatory attack though. The Silicon Valley Bank and others were more the balance sheet issue. But yes,
Yeah.
um, but it's just funny because that's how people view it, and I think that portfolio makes a lot of sense in this new world we're in. And it's funny because even stocks like the equities, that like there's no volatility there from my perspective. Like I've grown up in crypto markets, this is what I understand. It's like a 20% drawdown max over the last 15 years. Like that's not that significant, and as long as you have a cash flow with a normal job and you can wait out that period, you could sell the equity portfolio for most people for a little bit of cash as you needed it, and that's not a huge deal. And I think that's just the world we're in, and that is a function of an increasing monetary base, increasing inflation globally, and so these risk on assets are just more of a up only type of thing, and the real growth is happening elsewhere. So you can just put your money in the stock market as more of a savings type of thing as opposed to a high growth, because they're really not high growth per se. I think it's more inflated by economic global monetary policy as opposed to anything else.
Hmm. Yeah. No, I think that makes sense. And I when you said that, one thing that's interesting is that if this sort of theory holds, how will tax laws flow with that? Right now you sell capital assets and there's all these different rules about long-term, short-term, things like that. Crypto obviously is in that same realm, at least in the US. Elsewhere it's changing. But yeah, like I said, inflection point. A lot of things are going to change, and probably in the next 4 years we'll start going down that path with the new administration.
Yeah, it'll be interesting to see what changes, but yeah, I just think the tides are turning. I mean, people are becoming more educated on crypto, and it's not we're not trying to replace the dollar. It's just another alternative, disconnected asset class that is largely uncorrelated and is going to become increasingly so as time moves on. So I think it's smart to allocate, and just the fact that this person that I was talking about has no allocation to crypto assets directly, but has a 5%, 5 to 10% allocation of their retirement fund into bonds is ridiculous to me.
As a young person, 24-year-old.
Exactly, ridiculous.
Yeah. All right. Well, I tend to agree with that. Now,
Yeah,
Ben, did we talk about the crypto ETFs on the show, or was that in the pre-show? We were talking about all the inflows.
we didn't mention it. Yeah, we can. I don't have the numbers in front of me. You might, but I
Yeah.
think TLDR is that Bitcoin flows have been insane, record breaking for ETFs by an order of magnitude, and then ETF flows are radically picking up over the last 2 weeks. Am I correct?
Yep. Yeah. Basically, ETH had its first day surpassing Bitcoin a couple weeks ago. BlackRock's ETH ETF now has 3 billion in assets, which sort of in a relative valuation, multiply that by 20 for what the equivalent Bitcoin would be, which is craziness. And this was sort of interesting because I kind of look up to the BlackRock guys as kind of, the cool kids on the block know what they're talking about. Their head of digital assets this week, or maybe it was Thursday or Friday, said that they are not focused on alternative altcoin ETFs. They believe, and they said that the um, demand from their clients is they're basically still trying to satisfy their demand just for the Ethereum and the Bitcoin ones, and they think there's plenty of room to run there before they need to move into Solana, XRP, things like that, which is to me very interesting. Which says to me, BlackRock's clients are the big boys, and they're going to give them what they want. And right now, it's still Bitcoin and ETH.
Yeah, 100%. I think this goes back to what we were saying, even before the real bull market started here. Institutional cycle. Maybe like the meme coins were the early cycle. There's always crypto native narratives, but like I think looking back over this time frame, the theme will be that institutions are adopting these assets, and really the main crypto assets that make sense to institutions right now are Bitcoin and ETH. I think that's what they have the bandwidth for, and they're just starting to learn about really how smart contracts work, how tokenization can work and benefit them, and that's a narrative that's picking up for Wall Street, for the institutions. And I think a lot of the things that we're doing within crypto aren't even on their radar, and it would be way too much for them to care about at the moment anyways. So
Yeah, and to tie a ribbon around about three things we talked about, even in the space of Bitcoin and ETH ETFs, there's room for innovation, and the natural one is staked ETH ETF with Lido and similar tokens. To I don't know if this is the right comparison, but basically equivalent to a dividend, and to normalize that among large investors is sort of a natural next step that I think everyone believes the regulatory landscape will soon allow.
yeah, I think that's a huge one. These people love dividends. They love dividend stocks and traditional finance, and having this, as you mentioned earlier, an uncorrelated bond type of internet bond type of asset, I think will be really appealing. And again, that's just why I love ETH. I really am an ETH bull, and
Yeah.
I think there's only so much. Most of the talk we have about the institutions is just it's speculative. It's logical, but it is speculative. So I think that's as far as I can go. But if you just think from the perspective of one of these big guys in terms of what they would be interested in crypto and what's the next logical step, I think that makes a lot of
Yeah.
sense.
So Ben, this is another tax question here. Do you know off the top of your head if Lido rebases their staked ETH token or they pay out additional tokens
I
for
believe
the earnings?
I believe it rebases.
So it's interesting if it rebases, there's sort of no tax event there.
Mm-hmm.
The base of the price just magically goes up. There's no.
Yeah, I think that's all fine. I don't know that much about like taxes to be honest, and I think it's kind of stupid that we're trying to apply 50, 100-year-old tax codes to internet native digital assets, in my opinion. So how about we just Elon burn all of that slop to the ground and we just put in a framework that makes sense for the era that we live in, and that's my take.
Okay. All right. Well, let's move on.
Yeah,
Did
that
you,
well, it was like Gensler trying to apply the Howey test. He was like, in 1934, the Howey test dictate, and it's like, bro, like, come on.
well, where I was going with that is if it rebases and not just as appreciation of the price, then the risk-free internet bond is even better because it's a capital event, not an ordinary income event.
Yeah, I
So
get. My
yeah,
point is that like it shouldn't even matter how the revenue and income is distributed. Like, why does it matter in what form for how it should be taxed? Like, it should be the same either way. Is my point, and that's a fundamental issue with the system itself. But if you're trying to optimize for the current system, I guess
yeah,
your point would stand. So
yeah. Well, the current tax system in the U.S., and this is getting on a tangent, but clearly is tuned to a capitalistic society where investing money is rewarded almost double in tax rate or but you benefit almost 2x at the highest rates between working and investing. So,
Yeah,
you
that
know,
is
I don't
crazy.
know if that's going to change.
Yeah. Yeah, it's interesting. I don't know, man. I just do my best to put my transactions in Coinly or whatever it might be, parse through them. I try to get it right. I'm sorry if I don't always get it right. I do my best. It's very hard out here. They just need to make it very much simpler to pay your taxes and contribute to the welfare of the country and the programs you want to contribute to. But they just don't make it easy for investing in crypto in the modern age. So hopefully that changes.
Yes. All right. Well, let's get off this topic.
You did not
So
like
was
that one.
there was no, because we'll just argue. That's it.
Okay.
Um, so you had like when we started, you wanted to talk about we talked about the default retirement plan issue. We've talked about the crypto ETFs, radical portfolio theory. What was the fourth and fifth thing we wanted to talk about?
Yeah, there were a couple things that on Twitter. A bunch of Ethereum people are fighting again. There's people were coming at the Bankless boys
Oh
because
yes.
they were viewing them as not aligned with ETH, and they're essentially platforming or giving attention to criticisms of Ethereum that are hurting it in the narrative space, especially on Twitter. And they were saying effectively that they were having these bad faith actors with large venture positions in other competitors to Ethereum, such as Solana, such as Celestia. And those people were not making it clear that they had those positions, and Bankless was allowing them to be on. So there was a huge fight within Ethereum about whether what's going on is just valid criticism of how Ethereum needs to improve, or whether it's just a tactical mistake in terms of the marketing and narrative positioning of Ethereum. So any thoughts on that? I don't know if you read the comments.
Yeah, so this gets a little bit into something that is always has struck me as odd about the crypto community, and it's the word community. There clearly is this tribal aspect and protectionism. Both, I see it more on the Bitcoin side, but this is also on the Ethereum side about, well, it's almost like everyone will go down with the damn ship because community over everything. And I applaud that as a social construct, but as a financial construct, it's kind of stupid. Like, why do I want to, and this isn't ETH, but let's take any protocol. Just because it's got a great community, if the token goes to zero and I own the token, that doesn't mean I should stay with it to zero, right? It doesn't. Yes, I can like all the people in the community, but if it's not working out financially for me, then I'm going to leave monetarily and I can still like everyone in the community. It's odd to me that a lot of people aren't like that. A lot of people seem to be, well, I'm going to stick with this no matter what because, I'm here from the beginning. I'll be here to the end. And I maybe it's just me and whatever, but that just seems strange that a asset built on finances has this veneer of, well, we got to do what's best for the community, not what's best for me. Which maybe everyone just says that and they're all lying because the minute they get a shitty airdrop, they all start bitching and they say the protocol's not taking care of the community. So maybe that gets back to that.
Yeah, it's all a psyop. I don't think any of it's legitimate. It's a psyop by project teams and the marketers at the project teams to incentivize this longer term holding mentality. And I think that's what you're saying, to be honest. And to be honest, like
Yeah.
the current this was more of a thing last cycle and previously, to be completely honest, because people still use it as like a general trope to align people around a shared vision for the project. And I think that there's nothing wrong with that. Like you're trying to build legitimate technology. And I think like if you're looking at it from the perspective of a builder trying to build something, you do want core believers in the product. And I think labeling that community isn't inherently bad. But if you're looking at it from an investor or trader perspective, the community is not a reason to hold a token. It is not a reason, it is not something to base an investment off of. And yeah, that's my point. I just think it's mostly a psyop by marketers to get people to buy and hold the token. And it was very strong because it's a word used a lot in the meme coin space because memes have no product. So all there
Yeah.
is a community. It very literally is a community around a meme is the project. So it's the product.
Yeah.
So Yeah. So I understand where you're coming from, but it's just yeah, if you're investing in something because the community is strong, if it's not a meme coin, then it's probably not a good call.
Yeah, I guess for the meme coins, I can see that. That's all it is. It's some feel good, giggle, ha ha kind of thing. At this point, maybe that'll change in the future. But for everything else, the bottom line decision making is, are you making me money? And if you're not, then I'm going to leave. And you might be the nicest guys in the world, but you're a financial asset, and I'm going to make what's best use of that to me. And it's not my obligation to support you if it's hurting me. Your job is to make it so that I can support you because I'm helping myself. That's my take on this.
Sounds like you had some pretty intense experiences with the community concept that have jaded you to the whole notion.
Well, no, I've had great. I would say overall, I've had great experiences, probably exceptional experiences. But and maybe this is my own fault. You cautioned me about this, but I read these discords and I watch people say, this community's so great, and then the next sentence is the token will recover. There's no correlation between that at all, none. Um, so that's kind of weird. And I had another point there that I forgot I was going to make about this, but we can continue anyway. That was my take on it.
Gotcha. Yeah, well, the original
Yeah.
question was about Ethereum and the debate people were having. Do you have like a
Oh
direct
yeah,
opinion?
Bankless.
Yeah, do you have a direct opinion on what is the right thing here? Like, do you know enough about it to form an opinion on like
Yeah,
the actual? Yeah.
I don't see why Bankless are obligated to support Ethereum. They said in their post they're not supported by the Ethereum Foundation. They can do whatever the hell they want to do to keep their advertisers. And honestly, all the people bitching are just making more PR for Bankless. So it's a great move by them. I think the people griping have about zero impact
Mm.
on the price of Ethereum and where the roadmap goes. Maybe less than zero. Maybe they're negative impact. So I don't really care.
Oh wow. Okay. Well, I will give some context. I agree with you generally that Bankless has no obligation to just shill Ethereum and not voice competitors. And I actually think to an extent it is good to have like discussions about criticisms
Yeah.
where Ethereum can improve, like at the L1, for instance, improving execution there. At the same time, I do think that there is something to be said about one of the largest, it's just kind of optics, right? So, like, Bankless was viewed as an Ethereum podcast, and that's how they were. And people are just getting upset because they are hosting people from other ecosystems, and a lot of it is very bearish for Ethereum in a broad sense. Just the way that they're discussing it, showing all these ways. I don't think it's necessarily bad. A lot of Ethereum maxis were just mad that an Ethereum podcast with a lot of reach is showing stuff that's not pumping their bags, basically. And the people with these
Yeah.
criticism, yeah, I mean, but that's how the space works. And I don't necessarily
Yeah.
blame Bankless, but at the same time, it's like, it's kind of a valid criticism. It's like if Bankless is Ethereum aligned and they do want it to pump, then like they should just go stronger and say, you guys are all idiots because Ethereum has the strongest narrative and they should just hammer that in. But they have a venture firm and they're investing in all these other projects that are cross ecosystems. So that's not their incentives. So I think there's like a little bit on both sides. But if you're just a pure Ethereum maxi, yeah, I think it is dumb to go on Twitter and broadcast that Ethereum has these weaknesses because the way that crypto markets work is very narrative focused and very just dependent on the current whims of market participants. So I do think that has an impact, in my opinion.
Okay. So I don't disagree with anything you said. I think the community needs to grow TF up. I mean,
Who?
it's like
What do you
it,
mean? Like,
So here's what I think. So I think a lot of people in this community love places like Twitter now because you can voice your own opinion. And Elon Musk was hailed in the election. That's the real free source of information. So you have something like Bankless that's providing both sides of the coin on the same show, and people get all up in arms about that. Yet they're using the platform that allows this kind of discussion. To me, it's like, what if Fox News had a whole week of just Democrats on shilling the Democratic policy, or CNN had a whole week of Republicans on shilling Republican policy. To me, Bankless is in a better spot than either of those, right? They're at least trying to provide both sides of the coin. And the other thing that grinds my gears is all the people complaining know the people on there talking bad about Ethereum have bags in the things they're talking good about, which is exactly the same as Bankless just shilling Ethereum. So I don't understand it at all, really. I don't understand why people are so upset, except they're selfish. It's like a slap in the face because Bankless was their guys. They wasn't their guys. It's Bankless has their own institution, their own whatever that they are most interested in, and have zero obligation to the rest of us to do anything that doesn't also support what they want to do. So
Yeah.
I don't know. Maybe that's a grouchy old man get off my grass take, but I think it's just crazy.
No, a little bit. I think you're mostly right, but I just also think they have like valid credit. Like I think their mistake. These people. Okay, first of all, the people complaining aren't like no. Like the guy has co-authored 2 EIPs. The one who went viral. He did some cringy stuff as well in these criticisms, and I'm not fully on his side. He's legit. He's a legit market participant. He has a large following. He's a smart guy. All of that. So it's not just some random person just bitching and moaning because of this and that. But I generally agree with your takes. They can do whatever they want. They have these other interests, and that's completely fine. But it's like the example used was if you were a company like Microsoft or whatever, would you have a bunch of people coming onto your podcast about the benefits of Apple over your product? And it's not exactly the same because Bankless has vested interest in other projects. But I think his mistake was viewing Bankless as like an ally as Ethereum maxi when they have repeatedly said they're
Right.
not Ethereum maxis. They're Ethereum proponents, but they're not maxis. And this guy wants them to be maxis, but they're just not. And so like I understand it. It's like Bankless, if their core goal as Ethereum maxis was to just drill Ethereum narratives home, then what they're doing would be stupid. It's not a good tactical strategy to pump Ethereum and get it into the mind share because they have a large following. But that's not their obligation. It's not their MO. It's not what they ever said they were going to do. So I understand the critique, but I understand completely that Bankless didn't do anything wrong in my opinion, and it's just working in their self interest. So
Yeah, maybe that's a good way to look at it. I don't know who this person is, but clearly he's knowledgeable. He is extremely invested in Ethereum. And it's okay for him to be upset with what they did, but to criticize them or to say they're anything any less because they did it, I think is foolish. He can have his view, they can have their view. They're different. To make this any more than just competing views is stupid to me.
yeah,
And in some respects, that's a reflection of society, the current political landscape. And I know this isn't politics, but similar. Now, that reminded me of something. So I don't know if you saw, but this makes me so happy. Justin Sun and his affiliated decentralized exchange or centralized exchange is suing Coinbase for deciding to delist his MBTC token, which I think is one of the. What's that?
I think
Is that what it is?
wrap Bitcoin WBTC.
Yeah, W. I read this, and the response was by the Coinbase, a
Oh,
legal guy who's fun to follow. And I'm just thinking to myself, you know, and Justin Sun, I wasn't here for the last cycle. He seems like he might be an important guy, but he also might be a little bit of a shyster on top of all of that.
do you know who he is? Like,
He's the Tron guy, right?
yeah,
Yeah, Tron guy. My first thought was, welcome to the big leagues, Mr. Sun. Welcome to capitalism. Go ahead and sue. You're gonna lose and you're gonna get crushed.
you're
Is what
very
I thought.
contentious today. You're very contentious, but
Yeah, because I want this industry to be legitimized. I want adults in the room. I don't want backroom dealing. And that's something else we could get into and talk about. Should I see on Mode Network with where some of these rewards are going, but I'm not going to do that right now. Um, I want we all talk about transparency in crypto. That's a bunch of bull. It's a bunch of backroom deals largely, And okay, I can get that. But if you're going to try to go to the US legal system and sue the beacon of crypto in the United States, you need to be prepared to lose.
Wait,
All
why? Can
right.
you explain?
And
You didn't really what I know. So they're delisting wrap Bitcoin. Why? I don't know what Coinbase's process is. I assume like they're a private company. They have no obligation to keep anyone listed or to list anything. Like it's their own choices. So what are they suing for, and why do you think it is justified in Coinbase's case, and what was their reasoning for delisting the asset?
they are suing because Coinbase delisted them.
Like, but
Oh, wait. No, this was the classic.
what's the argument? Like, why do they say it's not illegal? Is it?
This was they didn't post the documents, but it's actually two things. And the second one's even better than the first. They're suing because they delisted them. That's part one. And part two is because they launched a competing product.
Mm.
My take on this is crypto. It's open source. If you don't want it to be open, then don't do crypto. Everybody can launch anything they want. All right? That's part one. And part two is they're not the government. They can do whatever the hell they want to do and list whatever tokens they want to list. And I freaking guarantee there's not going to be a lot of pushback or support for Bitcoin to have to list a foreign owned, or I don't even know what they are, foreign backed currency on a U.S. exchange. So I hope Coinbase smokes them, and we can just continue to have legitimate, well backed, transparent to the extent we can industry.
That's fine. I think that's a fine take. I don't know that much about it. I think to Steelman, I think the wrap Bitcoin product has gotten a lot of scrutiny recently because it is shady. Because Justin Sun's been involved in a lot of shady dealings, and there's questions about who secures the product. It's probably like a 5-person multi-sig where basically they have Bitcoin in a bunch of cold wallets on the Bitcoin network, then they just issue tokens with that's backed by those said locked up Bitcoins. There's not a lot of transparency there, and who knows how it's run. I think that's like the core of the wrap Bitcoin product, whatever. And from the other side, I think the only argument that you could have from Justin Sun and them that they might be justified there is that it's somewhat anti-competitive, right? Like if you delist a competitor and just like list yours, that could be considered anti-competitive, which in certain jurisdictions there are regulators to avoid those type of monopolies and those type of things. But the idea that they have a claim on that, just given their relative standing, all the issues that they've had, etc., it's a very weak case in my opinion. So I agree with you, but I think that's like the general complaint that they could have.
Yeah, I think that's okay. If this was a
Like,
if the
what if it was Kraken? What if it was Kraken doing this? What if Kraken had a wrapped Bitcoin product and it was like listed on Coinbase, whatever, and then Coinbase delisted it and launched their own? Would your opinion change?
no,
No.
let them compete.
Well, the idea would be that it's anti-competitive. Letting them compete would be they both get them listed, but it is like it's their own business. It's anti to their business interests. But it's like that's getting basically the government involved. We would have to say, hey, you have to list both of these, basically, which I don't want, and I don't think it's the right thing.
Exactly. I just felt like it's a you can be the big dog, but then when the wolf comes, be ready to get bit in the ass, is what I think.
Who pissed you off this week, man? You are just
No,
not having any of it.
no. Like I said, I want adults running the industry. I want
Adults
trans.
adults don't run the industry. I'm sorry.
Well,
You know, on
we,
the more institutional side, they do the
wait,
exchanges. But
time out.
sorry, I have to go. The core
I'm
of
not. Adults is the wrong word. I don't mean old people.
well, it's not even adults. It's a bunch of degens in the trenches experimenting with new things. That is the core of
I'm
the
even okay with that.
industry. That's all I'm saying. Is like these people are wrapping it up and being able to export it to normal people, and you need that. That is fantastic. But the heart of the industry is still the anon degens on chain. And I think if you take that away from crypto, we just become the traditional system. So that's my caveat. But keep going.
No, those people need to stay there. But for organizations that have reached, I'll say, the consumer level of public consciousness, we need practical minded, smart, reasonable people running them, and they can be 18 or they could be 88. I don't care.
You've just
That's
had
what I think.
you've just had enough of like shady backdoor dealings that
Yeah.
you see, and yeah, I mean, to be honest, unfortunately, I think a lot of that is just here to stay. That's just how it works. That's like a side effect of the technology. It's more on the like free libertarian open market side, and whenever you have open markets like this, that's one of the byproducts. I think so. It is what it is. But yeah, I agree. If you're having these consumer products and these public facing companies like Coinbase, you need strong good leaders. So
Exactly. Exactly. All right. I'll get off my tirade for a little bit until you say something else that sets me off.
yeah, we'll see. I'm kind of scared to bring anything else up. I feel like we've talked a lot about like I don't know the episodes where we talk a lot about the institutional side of things, like taxes, global macroeconomics. Like that's fine. I can talk about it, but I feel like that's not my wheelhouse. Like again, I'm more like in the trenches on crypto Twitter, seeing what's going on, and that's what I like talking about and knowing about. And I'm trying to think. Really, the narrative is still all these AI agents and basically hyperliquid coins. So I don't think there's a whole lot to talk about there. The one thing that I will bring up with AI agents is that I did see an article in increased discussions about AI agents and AI generally being integrated into DAOs because I don't know how
Mm-hmm.
much experience you've had with DAOs. You know what they are, but like in terms of participating in voting, I'm not sure if you've ever done that. But DAOs were kind of a shit show because there was not enough organization, voter participation with the token was extremely low. So the idea is to integrate AI systems and AI agents to operate on your behalf and to kind of be there to make transactions to vote in alignment with your self interest. There's a bunch of interesting new proposals about models that could be used for the next generation of DAOs 2.0. And I think this is a narrative to keep your eye on. And it's something that AI could legitimately help to make crypto DAOs more legitimate organizations, to make them run better, to make them run more efficiently, and not just be a shit show like they were whenever they were created basically last cycle. I guess
Yep.
they're better than that, but they didn't really become pervasive until DeFi governance tokens started being tossed out. But yeah, I think that's an interesting space to look at.
I think our friends at Alora talked about that was one of their first industries was helping to automate those sorts of operations.
Yeah, I think that's very cool. I think that's
Yeah.
a good use case for AI times crypto. And again, yeah, I think the AI DeFi, AI DAO stuff is going to be interesting. And yeah, so we'll see.
There's finally been a few, and the names escape me, but a few AI projects that get to what I wanted that we talked about in the past. And maybe it wasn't AI, maybe it's just, telling me stuff, but also automated yield farming, including reward optimization, multiple, just the yield plus whatever incentives you get. And that's starting to, I've seen at least two or three just this week that one is in operation, others are coming online, which I think will be, pretty cool for the at the degen level. And then, obviously the next level are these agentic interfaces, the Codex guys, and I think a bunch of others are starting up with where the normal, or let's say a technically proficient person could use a phone to interact with crypto without needing wallets and things like that. So
Yeah,
yeah, that's still very bullish, and I'm sure we'll have another episode where we talk more about the details of all that stuff going on. Oh, that reminds me. In fact, next Thursday, Ben, I'll be doing a user interface study with one of those protocols with the Giza guys. Putting my money in there and seeing how it operates. So we're gonna hopefully have an interview with them, and I can provide some feedback on how that worked. Because to me, that's the true AI part. That's where it's making decisions for you, and that's what interests me.
yeah, I think that'll be great. I think that is the cooler part of this AI times crypto tech from like an investing perspective. Who knows what catches hold? Like the best investments over like the last month or whatever, when the agents have gone wild, have just been these AI agent tokens and like virtuals, etc. But I think the lasting innovation will come from these DeFi integrations, these portfolio management tools, and like the user interface improvements that come from having AI agents act on your behalf. So definitely an area to keep your eye on. And yeah,
Cool. Yeah, the virtual stuff reminds me of just modern age Beanie Babies, honestly.
Oh, you're really sounding like a boomer.
Maybe they'll.
Oh, this is a great one. No, I know how to
Yeah,
piss
I
you
know.
off.
Maybe they'll.
Wait, I know how to piss you off again. New conversation topic. NFTs are back,
Okay.
baby. Can't even deny it. Pudgy penguins, 100K per penguin. You can go cry. I told you to buy one like a long time ago. I didn't have the funds. It is what it is.
All
100K
right.
pudgy penguins. You were wrong. You have to say it. NFTs are back. You have to.
All right. I will say that high quality NFTs may be there. And in fact, Mr. Park, in his radical portfolio theory, does advocate a small percentage in high quality NFT type assets.
You know what you're
So
doing.
I'm big enough. I'm big enough to admit when I'm wrong.
Okay, that's fair. Yeah, it's very logical. I mean, it's like what do rich people buy whenever they have everything in financial markets that they want? They buy art, they buy status goods, and these high-end NFTs, like CryptoPunk specifically, are the best example. Are an example of this digital status symbol, and that's really the main reason. And if you think that's ever going to end, you don't know anything about humans because basically what we're doing with everything we do is playing status games, and markets are one
Yeah.
way to accrue wealth to play that status game, but it's super inherent to us, and the idea that we're not going to have this instantiated on blockchains is just stupid, to be honest. Like, they're back, and then Pudgies and a few others are partly that, and also partly a new generation of media companies, and they're trying to build a media ecosystem, and you saw like the Pudgy toys,
Well,
and they have a bunch of other
yeah.
things. And the NFT is just like the on-chain instantiation of being a part of that media community. I know you hate the word, but it is what it is. And yeah, I think that's like the next area of the NFTs that has been overlooked, and I do think it comes back. Like as the crypto ecosystem continues to grow and pervade, that these models will continue to work. So congrats, Pudgy Penguins. Congrats, some NFTs that are back.
Yeah.
So that and the
Yeah.
the
The
Pengu
the
airdrop. You hear about this?
the Pudgy Penguin the Pudgy Penguin franchise, I I like what they're doing with it. To me, that sort of thing resonates and makes sense in my brain.
Okay, that's fair. That's fair. They really started pumping on the news. They're dropping a token too. That was like the big news. I don't know if you saw that.
Oh, really? Wow.
Yeah, yeah. They're dropping a token. That's huge news. So those and a bunch of other blue chip NFTs have started running up on that. But yeah, $100,000, about 23 ETH, 24 ETH for a pudgy penguin, which is pretty crazy.
Wow. Well, like I said, I can admit when I'm wrong, and some high quality ones are definitely way to go. Plus my little 6 cent Grand Tonto NFT. I still like that one.
Yeah, that's fine. I like the guy. It's your character. Everyone likes good PFP NFT. It's
Yeah.
nice online persona.
What's PFP stand for?
Profile picture.
Oh, but why is it PF? Profile's one word.
I don't know. There's a bunch of acronyms like that.
Oh, all
It's always
right.
been that way.
All right. Look, we're coming up on an hour here. I think we've exhausted our topics. Um, Looking forward, I don't know if I can convince you to do this, but I would really like to do a live show from the U-Haul on our way from New York City to Charlotte. Do you think we can manage to do that on Tuesday?
I don't know. I think it would be pretty bad to be honest, but you never know. Maybe.
All right. All right. Well, Internet Capitalist, thank you for joining us this week. Benjo, do you have anything more?
No, nothing more. If you stuck around, thanks. I feel like it was kind of ranty this one, but it is what it is.
Yeah, exactly. Well, it's our show. We can do what we want on it, right?
There you go.
All right. Out.
See ya.